Hey everyone, I am PPC Ian and I own 37 dividend stocks in my portfolio. I want to go through my dividend stock portfolio with all of you today because I just compiled an update and I want to share with you some takeaways, some lessons that I took from my portfolio analysis. Now, I share on Patreon, on my Corner Patreon, which I will link to in the pinned comment below, all 37 positions and the percentage allocation to each. But what I want to do today on YouTube is I'm going to share my top 5 positions, and I'm also going to share the key takeaways from my recent portfolio analysis. I want to do this through the lens of Blossom. Check it out on the screen right now. Blossom is an app that started out in Canada by my friend. He co-founded it, Brandon Beavis. Many of you know him. He's a very prominent YouTuber from Canada, one of the coolest guys around, one of my favorite YouTubers and my favorite investor from Canada. He co-founded this app. Well, it's now open here in the US as well, and it's a social media platform where investors can share their portfolios and communicate with each other about investing topics. And there's a lot of dividend investors over there. So I thought I would use here on PPC Ian today just the portfolio I shared on Blossom. And what you see in front of you, it represents my top 5 positions, and then I lump everything else into SCHD. Now, my SCHD position, it's actually quite small. I'm trying to build it. But again, I only share the complete portfolio over there on Corner Patreon. So I thought what I'd do, just to simplify things here and on Blossom, is to just represent everything else, kind of that other bucket, if you will, by SCHD. I hope that makes sense to all of you out there. I own SCHD, but I also own a total of 37 stocks, and not all of the stocks are represented here, just 6 out of the mix, my top 5 holdings, and then I'm lumping everything else into SCHD. So the first thing you're going to notice on the screen in front of you in my portfolio is that PepsiCo is now my number 1 position. How about that? It represents 8.77% of my portfolio's value, and it represents 7.07% of my dividend income. Now, the reason for this is obviously there has been some stock market volatility, and Starbucks has fallen in share price. PepsiCo has relatively done well. It used to be that my number 1 was Starbucks, number 2 JNJ, number 3 Pepsi, but it has flipped, and it is so interesting to see how the portfolio kind of updates and it evolves over time. But I'm proud to have PepsiCo as number 1. As you can see on the screen in front of you right now, my number 2 position is Jonson Johnson. So J&J comprises 8.6% of my portfolio's value and about 7.55% of my dividend income. Next is Starbucks at 8.37% of my portfolio's value, 6.59% of my dividend income. Next up is McDonald's. It comprises 7.15% of the portfolio's value and 4.78% of my dividend income. Now, here's a surprising one. Some of you might remember, Ian, you went kind of nuts earlier this year, late last year. You were really focused on yield, and I'm glad I was because it's actually panned out pretty well for me. But I made a big trade. I added a lot to Altria. And so I brought Altria all the way up to that number 5 position. It's my number 5 largest dividend stock, just behind McDonald's. And as you can see on the screen in front of you, Altria, it now comprises 7.05% of the portfolio's value. That's just right behind 7.15% for McDonald's. And really staggeringly, it comprises 16.13% of my dividend income. So surely I have a lot of weight on Altria in terms of dividend income. And so when I sum up these numbers, just so you all can kind of have the perspective of what I'm sharing here in front of you today, my top 5 core positions, they actually comprise a staggering 39.94%, or round that up to 40% of my portfolio's value. So I have 40% of my money riding on just 5 stocks. That's the conviction I have in these names. Now it's 42%, 42.12 to be precise, of my dividend income that is comprised in these top 5 positions. And so that's really exciting to see. I'm so excited to update it because a lot has changed with my portfolio. And I think the biggest changes in that top 5, it really comes down to Starbucks, taking a decline on its value, but also Altria making it into that top 5. And so that's where I'm at. If you want to see the rest of the portfolio, it is over on Corner Patreon. I share the percentage allocation to each position, all the 37 positions. I'll link to that in the pinned comment, but I have a lot more to share here on YouTube with all of you today. And so I want to go through some speaking points. I want to share with all of you what I took away when I went through this most recent portfolio update. And so one of the things I took away, I'm going to just share it on the screen, kind of lesson number 1, aside just from what I just shared, is, hey, my portfolio's average yield, it's up. It's up a lot. I'm at a 3.73% now overall dividend yield. When I did my last update on Patreon, Corner Patreon, just late last year, I believe, in December of 2023, my average portfolio yield was at a 3.44%. And so my portfolio yield is rising. Why is that? Well, I made a huge trade in Altria, which now comprises 16% of my dividends. And if you remember, I made a number of trades in Realty Income. It's now a top 10 largest holding for me. I want to make it even larger in my portfolio. It comprises 7.38% of my dividends. Now, what happened is because I refocused on these quote unquote higher yielders, I was able to quickly bring up my overall portfolio yield. And this means something to me because I'm increasingly tapping into dividends in my portfolio to help pay bills. I'm still reinvesting a lot of my core positions, but I am not reinvesting others. And I am using dividends right now to help pay bills, and I want to increasingly do that over time. I want to increasingly enjoy partial FIRE over time. Maybe the partial nature of it can get bigger and bigger. And I can only do that by really focusing on higher yielders right now because I have fewer years to wait. I don't have as many years for the dividend growth to happen, if you will. I want some higher yield right now, hence my evolved strategy. So that was one fun takeaway. Now, I'll tell you, in terms of personal goals, everyone's goals are different, but mine, I would like to see a portfolio-wide yield of maybe 4 to 4.5%. So I have a ways to go in terms of actually adding more to stocks like Realty Income and Altria over time. But I have a lot more to share. So the next point I want to share, as you can see on the screen in front of you right now, is basically, how is my portfolio doing? I have just it's really hard to tell because honestly, I took some money out of the portfolio. Some of you remember this. I'll link to this in the pinned comment. But I had a real estate transaction where I wanted to take some money out of the portfolio to help fund that. And so the portfolio took a hit in value. This was in 2023, but I've been rebuilding. And so there's a lot of kind of changes that have happened in the portfolio over the last few years. But when I just take a step back and I look at the bigger picture, I'm just looking at May of 2024 versus April of 2022. My portfolio value has increased by 24%, but my dividends are up 49.5%. And so that was honestly why I wore the green shirt today, because the dividends, they're really well into the green. And a lot of this has been by consciously adding to strategic positions that are higher yielders. Some of this was when I did have to sell stocks in 2023, I reshuffled the deck. I got rid of the stocks that either paid no dividend or paid a really low dividend. And so some of that was just strategic reshuffling. Some of that, quite frankly, has been the magic of dividend reinvestment and dividend increases. I have a number of positions in the portfolio that have increased dividends quite aggressively, and it helps, it compounds over the years. And so I'm very pleased with those results. I don't think I could ask for too much more. If I keep up at a pace like that, which I don't think I will, it will be very good. But if I can kind of get anywhere in that ballpark, quite frankly, I'll be very happy. So it's exciting to see those results. But again, those results aren't just kind of a strict, hey, here's how it performed doing nothing. There's been a lot of reshuffling of the deck over the years. But again, I've just been kind of zooming out here to see, Ian, at the end of the day, how did you do? And I'm pretty happy with it. I'm pretty happy with that. So I want to keep going. The next point that I wanted to share with all of you today, as you can see on the screen in front of you right now, is just how does my portfolio look? And so what I wanted to share on the screen with you right now is kind of a category breakdown. And How much money, value percentage do I have in each category? And how do those categories kind of weigh in terms of dividends? When you look at this screenshot, one of the first things you see is, hey, Ian, you're pretty dependent on SIN stocks. You've got 26.8% of your money coming from them. Yes, I have some concentration of risk there. I'm willing to take it because I want the cash flow now, but I realize what I'm doing. I realize that it creates risk. When I actually look at this and I look at restaurants, CPG foods, CPG and SIN stocks, and honestly, SIN stocks are basically more CPG food, if you will. I add those up in terms of value, that's 56.8% of my portfolio. When I add up the dividends, it's even higher, 61.5% of dividends. I have a lot of concentration in very few categories. What this tells me strategically going forward is how could I do better? I could do better by adding to other industries. One industry that I want to add to is healthcare. I believe Jonson Johnson is still on sale. That's one that's on my list. Pfizer is on my list as well because it helps bolster my goal of higher portfolio-wide yield. I would love to add to defense as well, but my defense stock, RTX, it's not on sale right now, so I'll just have to wait on that. But I realize my portfolio is kind of one-sided. I'm heavily weighted in certain stocks, certain categories. That creates a concentration of risk. So be it, but it also informs me what to do going forward. This is one of the reasons I want to make SCHD a top 5 position in the portfolio. It brings that broad diversification that I otherwise would not have. And so I want to keep going in the video today. Check it out on the screen in front of you right now. Let's talk about the 5-year dividend compound annual growth rate. One of the things my corner patrons will see, and I'm going to share it here as well, is I went through every stock in my entire portfolio and my ETF as well, SCHD. I looked at what is the 5-year compound annual growth rate of the dividend on average. And then I did a weighted average by the weighting of each position to look at what is my overall portfolio's compound annual growth rate on average for the last 5 years. Well, it's 4.77%. And so I have a dividend kind of starting yield, if you will, on my mix of stocks of 3.73. That's my overall yield on the portfolio. And I have a growth rate on that of 4.77% per year. If I were to add no more capital and not reinvest at all, that's just the dividend growth rate of the companies that I own. My takeaway from this, honestly, is kind of a self-critique. When I look in our interest rate environment that we are at today, interest rates are pretty high, 5% if you will. I have a start, and yes, treasuries are taxed as ordinary income. My dividends in general are qualified. Realty income is not, but most of my dividends are long-term cap gains. Great, there's kind of a tax benefit on my side here in the US of my strategy as of now. But I look at that is, honestly, I want my portfolio yield, the overall yield, to be higher. I've already shared that. I especially want that in light of the fact that the dividend growth, it's not that high. I would say, hey, 4.77%, it's not bad, but it's not 7%. It's not up there. And so what all of this has informed me is kind of a self-critique, and it's fine because my portfolio in general, I've de-risked things by being so diversified, and I'm happy with it. As I said, at a top level, I'm wearing the green shirt because I'm thrilled with my dividend cash flow, just the raw dollars that are coming through. But if I were to improve upon what I'm doing, how could I do that? I really see a 3-tiered strategy. The first tier of the strategy is going to be SCHD. I need to find a way, and it's going to take some years to do this, to get it into the top 5. The reason for this is the compound annual growth rate on SCHD on average is about 11%, if I remember correctly. Also, SCHD has a starting yield of about, I think it's about 3.28% right now. So it's lower than my starting yield, but it's in the ballpark. It's in the ballpark of my overall portfolio yield, but that compound annual growth rate on average is far superior to what I'm seeing portfolio-wide. And so what that tells me is this ETF that is algorithmically driven, quite frankly, is hard to beat. It's hard to beat this thing with an active management style And I would be well served to make it bigger in the portfolio, to make it a lot bigger. I wouldn't mind having it the number 1 position. Will it get there? Maybe. But for now, I want to shoot for first top 10, then top 5. So that's the first takeaway from that self-critique. The second, and I don't sell stocks, generally speaking, although 2023 was an exception. As I mentioned earlier in the video today, I needed the money. But how am I going to get SCHD up there? It's going to be via deploying new income that I actively earn into it. Or there's one other kind of nuance. I have a treasury maturing soon, and I'm going to take the matured treasury and put that money, most likely the majority of it, into SCHD at this point. Or split it between SCHD and one of my favorite SIN stocks, which we'll talk about in a minute. So that's kind of pillar 1 of my strategy going forward from the critique of doing this exercise. Pillar 2 is core stocks. Ian, do not lose sight of core stocks. Because when I look at my core stocks, and I'll just put Blossom up on the screen again, shout out Brandon Beavis, Blossom. Follow me over there. I'm PPC Ian. I'm trying to build a following. It's a great community. Love to kind of engage with folks over there. But what I want to share is I'm showing this because let's just go through the compound annual growth rate on the core stocks. Let's say just even top 5 core stocks. Well, on average over the last 5 years, PepsiCo is up 7.2% per year on average, the dividend. My number 2 stock, JNJ, 5.5. My number 3 stock, Starbucks, 9.6. My number 4 stock, McDonald's, 7.6. Number 5, Altria, 4.1. But look, Altria is a real high yielder. If I just do a simple average on those, on average, I'm getting 6.8%. My core stocks are growing at a rate much faster than the broader portfolio in terms of the dividend. Are my core stocks keeping up with SCHD? No, but they're kind of in that range that I've always been comfortable with. If you remember me from my backyard days, kind of one of my golden rules back then was Ian, pick stocks that are growing the dividend on average by 7% per year. That's a great sweet spot. That's kind of where my core 5 are coming in right now. And if I got SCHD up there into that mix, it would be even higher. And so that was pillar 2 of my takeaway. I want to see a little more dividend growth. Let's push those core stocks. Let's push those best ideas. The third pillar, though, that came out of all of this analysis is, okay, I've got a overall portfolio yield, and I'm looking away from the camera because I'm looking at my notes here. I've got an overall portfolio yield of 3.73%. Great. I've got a growth rate on average of 4.77. It kind of tells me 2 things. Again, first was SCHD just seems like a no-brainer. It's just on both ends of it. On the dividend growth and the starting yield ain't so much worse off than where I'm starting portfolio-wide. But the other takeaway was just, it would be nice, honestly, given that I'm only seeing 4.77% dividend growth per year portfolio-wide from the dividend increases, I'd like a higher starting yield on the whole portfolio. And so the third pillar, the third takeaway was, Ian, focus on those stocks like Pfizer. Focus on those stocks like Realty Income. Ian, focus on those stocks like BTI as well. And so with my maturing treasury, I might put some of that in BTI, some of that in SCHD. I'm kind of torn between which. Maybe I'll do 50-50. We will see. But that's where I'm at. Let me know in the comments below what you think about my portfolio, about the update today. I hope to see some of you over on Corner Patreon as well. I'll link to that in the pinned comment. I hope you enjoyed it. I really appreciate this community. It's a lot of fun being a dividend investor, being here on YouTube, sharing my journey with all of you. And before I go, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market. I'm not a licensed financial advisor. I'm just sharing my journey for fun. Make sure before you invest to go out and consult a licensed financial advisor first. Also, today's video, it's not tax advice. I'm not a licensed financial advisor nor tax advisor. Before I go, in terms of a full disclosure, I do own the stocks I mentioned today. I am long PepsiCo, ticker PEP, Jonson Johnson, ticker JNJ. I'm long Starbucks, SBUX. I'm also long McDonald's, ticker MO. I'm long Altria, ticker MO. Thug life. I am long Realty Income, ticker O. I am long RTX, ticker RTX, Pfizer, ticker PFE. I am long British American, ticker BTI. I'll link in the pinned comment below to a video I just did on those guys. I am also long the ETF SCHD. Thank you so much for watching. If you enjoyed the video, don't forget to click that like button. It means the world to me. It really helps me out. And I will see you in the next dividend stock investing video.